You've probably heard this term tossed around in the real estate world many times. It's called a vendor take-back mortgage or a VTB, or maybe the seller holding the paper. Well, I'm Sean Ryan from Blue Coast Realty. Today we're going to break down a little bit about a vendor take-back mortgage and why people use them. So first of all, what is a vendor take-back mortgage? Well, a vendor take-back is when the seller, the property owner, essentially becomes the bank and they hold the mortgage for the potential buyer. Now everyone's thinking, why would a seller want to hold the mortgage for a potential buyer? Well, there's a lot of upside for the seller on this as well. The seller could pick the interest rate that they're holding for the buyer. A lot of times it could be interest only, but also the rate could be much higher than they might get a return on investment in some markets. And also it's going to help the seller facilitate their sale. So why would a buyer use a vendor take-back mortgage? Well, there's a lot of different reasons. One was maybe this buyer couldn't qualify for a mortgage with a bank, and the seller is willing to do a vendor take-back to help them for a year or two till they're ready to get a traditional loan from a traditional institutional bank. Another reason is, say it's a commercial property and it's really tough to get that financing for it. Sometimes the seller will hold the mortgage while the buyer can get everything lined up, maybe get the rents lined up, maybe fix the property up so they can help facilitate the sale until they can go to a traditional financial institution. A lot of times I'll see it in this, and I've used it personally for this sometimes it's for income properties. Sometimes the seller wants a certain amount of money for the property and the bank just won't do it because the rents don't make sense or the property's not in the right shape. So sometimes if the seller is able, if they own the property free and clear or they don't owe that much on it, they'll do a vendor take back for that buyer until they can get the rents up, get the property in order, where a traditional institutional lender will look at the property and then they will pay the seller out. So a vendor take back is also really good for a seller sometimes because say it's a buyer's market and they're having a hard time selling the property. This might be something that is attractive to some buyers, especially in markets where interest rates are a bit higher. The seller sometimes can offer a bit of a lower interest rate. They could do their payments based on principal and interest, or they could do interest only payments as well. Real estate investors love doing vendor takebacks as well because it's a great tool to do BRRRRs with. And that's where the seller is going to hold the mortgage, you're going to get the property, you're going to fix the property up, increase the value, get it appraised for much higher. You'll be able to pay the seller off for the money, pull out all your money back for the renovations, and then go do another one. And that's what the whole BRRRR stands for is, buy, renovate, refinance, repeat. And that's a great tool, a vendor take back as well. So I hope that helped about explaining a vendor take back mortgage, a little bit of why people use it, why people would do it, and some of the instances that we see it. We see it in many different other vessels and different ways as well, but this is a great introduction to vendor take back mortgages. Thanks for watching and welcome home to the Blue Coast.